let's get stuck straight into it. And I thought I'd take a look at one of the top corporate stories today as our stock of the day. James Hardie raising its full-year earnings forecast for a second time, counting on strong demand for its fibre cement products from a booming US housing market. This as first half profits nearly triple thanks to double-digit sales growth, with net profit topping $270 million and global EBIT touching a new record. Company declaring an interim dividend of 40 US cents a share. Scott Phillips, pretty impressive numbers. What do you think of James Hardie at the moment, and does it still have value in its share price?
Koshy, those are great numbers, really, really strong numbers. The reported profit up about 200%, but the adjusted profit up about 30%, which is more reasonable. Sales up 23%. And as you say, a booming market, not only in the US, by the way, but really strong results here at home and in other parts of the global empire as well. Nothing to dislike about these numbers at all. The question you ask, though, is the right one in terms of both valuation, and I suppose we've got to ask that question about the cyclicality of the business. James Hardie's demand, of course, is all about housing construction, housing renovation. Great when it happens. When it doesn't, when it stops, and we certainly saw housing go, not backwards at least, growth stop and reverse to some degree in the US post the GFC and their big housing build back then. These things can get ugly really quickly if and when they do. The challenge for investors, I think, is trying to work out how much to pay. 38 times earnings on historical earnings. On these new numbers, probably closer to 30 times, so not as expensive. But if you're paying 38 or 30 times for a building materials company, you've either got to believe that growth continues for a very long time, or the high level of sales and profit can continue at very least for an extended period of time to justify these sort of numbers. The hard part is trying to work out where we are in the cycle, because it doesn't need all that much more to start to make this look like a good set of numbers. I have to say that the operational success is fantastic. A bit like commodities companies, James Hardie isn't responsible for how we price their shares or even what the cycle looks like. All it can do is make hay while the sun shines. I can't buy the shares now, Koshy. If you're going to buy cyclical businesses, you want to buy them at the bottom, not closer to the top, just because of the way those cycles work, right? You average out across the cycle and say, right, how much is James Hardie likely to earn over the cycle? How much do I want to pay for that over the cycle? If I get a good price, I jump in. James Hardie just doesn't look cheap enough, nor does it look average enough in terms of that cycle itself to believe that the PE is reasonable to pay. Again, doesn't mean it can't go higher, doesn't mean the good times can't roll for a bit longer. I'd be very, very surprised if we don't see a lower price for James Hardie shares at some point during the next cycle.
Okay, so shares down 7 cents after the announcement, so market thinking like you at the moment. If you had James Hardie shares, is this the top of the market?
I don't know about the top of the market, mate. It's a hard one. Impossible to know exactly where we are by definition. We don't, it's like bubbles. You don't know them until they pop, right? You look back and go, oh, of course it was a bubble. I don't know. It looks like the results look like they are towards the top of the historical range. The price looks high on that basis. Is it the top? No idea. Is it likely to be in the top, 10, 20, 30% of all-time sales and share price during this part of the cycle? I'd be very surprised if it's not. So, yeah, look, if I had to flip a coin and say, is it likely to be towards the top of the market? Yeah, I think it is.
Okay, so would you keep holding if you're already in it and had a good run?
I don't think you can, Koshy. I mean, because, if you're going to see a lower price at some future point, I think you will. You kind of want to take your money and run to some degree. Not in a desperate hurry, but, if the price is going to go down, if there's better ideas elsewhere, again, tax is always important. If you've got a massive tax bill to pay, maybe it changes the decision. But I can't see it beating the market from here. If you're not going to beat the market, then find something that will or buy the market itself rather than hold something that I expect from here will actually lag the market.
Kevin, what do you think of the result and James Hardie as a stock?
James, the result was excellent, as Scott says. I have to, I agree with everything Scott says there. And as a business, it is, as Scott says, cyclical. It's not one that we look at the moment. Our methods tend to favour businesses that are smoother in their profits and are not so cyclical. We're not against cyclical businesses. We just like to see them make profits even in the downtime reasonably consistently. So for us, the returns are not great. As Scott says, the PE is very high for a building services business. The debt to equity for us is too high at about 87% as well. So it doesn't meet our filters. the stability of growth of the earnings is also getting a little low. It's not too low for us, but it is a little low. Although the sales stability is very good at about 93%. Right. So it's not one that we would look at this stage until those figures tend to become more stable, smooth out, and if they were to get rid of their debt a bit.
Okay.